Hello, in this presentation we will enter an adjusting entry for accrued interest into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're first going to take a quick look at QuickBooks and then move on to Excel and enter the data there. What we will be doing is entering accrued interest related to the loan. You'll recall we had two loans before this. One was a $5,000 and one was a larger loan. We're accruing the interest expense on the $5,000 loan. And we're saying that the payment of the $25 interest, which will not be paid until the end of the loan, has accrued, meaning we have incurred it. We've been using the $5,000 loan for a month and therefore owe the interest at the end of this time period and need to record the expense and related liability for that. I know this is a small amount, but this will give us the principle of the concept. Within QuickBooks, we typically would do this with a journal entry with just about any accounting system needing to know debits and credits, but it is possible within a QuickBooks system to use registers in order to do this, and that's one way we can take a look at this and go through the interest payable register and enter the data in that format. We're going to work this in Excel and work this through the entering of a journal entry. Here we are in Excel. We're going to have a new journal entry. We are on the Adjusting Entries tab. This is going to be the worksheet where we're going to enter the data for the adjusting entries here in terms of the journal entry. And then we're going to post that not to the general ledger, but to the adjusting column, giving us a quick view of the unadjusted trial balance and the adjustments that we will be doing all as of the end of the time period. We're going to go back over here and put the date of 2/28. This is going to be a more traditional adjusting entry. Most adjusting entries, unlike the one we did before, which was really just a reallocation of the short-term and long-term, will have a balance sheet portion and an income statement portion, meaning there's going to be one account above the blue line, which is going to be an asset or liability account, and an account below it, which will be a revenue or expense account. In this case, we're dealing with interest, so there's going to be an account above the line related to interest, and it's going to be interest payable. So I'm going to put a little yellow mark right here. I'm just going to right-click in E13 and put a little yellow mark. We're going to be dealing with that account right there. And then scroll down, and we're going to have another account below the line in the dark blue dealing with interest. That's going to be interest expense, so we'll have interest expense here. Going to right click there and put a little yellow mark there as well. We also know that interest expense, like all expenses, have debit balances, and we need it to go up, so we're going to do the same thing to it, which in this case is a debit. So without even knowing what we're doing, and we will talk about what we're doing, we can get a lot of the accounts and which way they are going just going through this process, meaning most of these accounts are going to have some account above the line here in terms of equity. And most of these journal entries that are adjusting journal entries will have an account below the equity account, and they'll all be named somewhat similar to what we're doing here. This is related to interest, and therefore we're dealing with interest expense, and expenses only go one way. Like all income statement accounts, they only go up. Therefore, we know that we will be debiting the interest expense. So I'm going to copy that and put that up top. We'll put that right here. That's going to be the account we will be debiting in this process. Right click and paste 1, 2, 3. And if we debit that account and the other account related is this one, and there's only two involved, this must be the credit and therefore go on the bottom. So we're going to copy the interest payable by right clicking on it, copying it, and putting that in B10, right clicking and paste 1, 2, 3. I'm going to go ahead and indent this by going to the Home tab, go into the Alignment group and increase the indentation. And then we just need to know the amount here. So once again, we put that together with not knowing too much more than just the fact that we're going to be dealing with interest. And it's an adjusting entry, and therefore we have interest expense and interest payable. Also note that these adjusting entries almost never deal with cash. These are going to be timing differences. Cash has been taken care of in the normal accounting process and when we reconcile the bank account. So cash pretty much is what it is at this point, and we're just doing the other types of adjustments. So if we scroll back over here to our amortization schedule for the $5,000 loan, what we're saying is this first amount here, this payment it's actually, we're not making payments until the end of the loan, but we have 6 periods, 6 months. And that means that the interest is accruing. We do incur interest, just like if we were to rent something, we still incur the rent that we are using the place, even if we haven't yet made the payment. Same concept here. We haven't yet made the payment, therefore haven't recorded the interest expense yet, but a month has passed, and therefore we should recognize the fact that we owe $25 more than we originally had on the $5,000 loan, and therefore that's what we are doing here. We're going to increase the interest expense, the interest that has been incurred over the use of this money, and increase the payable, not the loan payable. We're going to make another account called interest payable, and it'll be another liability account related to the loan, but we're going to track that separately. So we're going to scroll back over to the left and record that 25. It's going to be $25 interest expense. We're going to have the same amount on the credit side. We have now journalized the adjusting journal entry, and we will now post it not to the general ledger, but to our worksheet. So we're going to record that in the middle item of our worksheet, giving us a nice quick check as to what is going on. Again, worksheet ideal for just a few journal entries. It's really great for just a few journal entries because it gives us a quick look at the big picture and seeing everything that is happening. So we've got the interest expense here. It's going to be in order: assets, and then liabilities, and then equity, and then income and expenses. We're down here, interest expense. We're in cell M27. M27, this is where we will post the journal entry. What we're going to do is say equals, and then scroll up just a bit and point to that $25 debit. Let's do that now. We are in M27, selecting equals. We are scrolling up just a bit, and we are pointing to that $25 and enter. The amount now goes from 0 up by 25 to 25. We are out of balance now by the 25 till we record the other side, and we see that that has decreased the net income. Remember, net income is revenue minus expenses, and this revenue accounts, these revenue accounts, are credit balance accounts, expenses debit balance accounts. Therefore, this bracketed number is revenue or net income over the expenses, revenue over expenses or net income. It was at 6,847, went down by the 25 to the 6,822. Let's now record the other side. Other side is going to go to the interest payable account. Here's the interest payable account in the liabilities section. It's going to be increasing because we are crediting it and they are credit balance accounts. We're over here in M13, so we are in cell M13, selecting equals and pointing to that $25, bringing the balance up from 0 to 25 in the credit direction. If we scroll back down and see that we are indeed back in balance. As we're working with this, we can note how easy it is for us to just check what is going on in terms of the accounting equation or any individual accounts with the worksheet. So note that obviously within the liabilities, all we have to do is highlight the liabilities in the unadjusted trial balance. That's 78,832, and see what happened to the liabilities by highlighting them afterwards. And we still have the we have 78,880. We have 78,857. The only real change being that 25, because this is just a transfer from one liability to the other. We can see the effect on the total equity. Remember that net income is everything from here down to here. Total equity, if we just highlight the draws all the way down, that's going to be total equity. It ends at 150,802. It started at 150,827. We can also calculate that by saying assets minus liabilities, which are debits of assets, minus liabilities gives us the equity, and that's the 50,827 starting point, and we ended at assets minus liabilities, 50,802 ending point. So we can get most of what we need just from this nice little worksheet. It's going to be a great tool to have as we go through the adjusting process, and it's typically what is used during the adjusting process.